Today's tax tip is about the reform of business property relief and agricultural property relief, or BPR and APR, which was announced by Rachel Reeves in the autumn budget. From the 6th of April 2026, a new £1 million allowance will apply to the combined value of agricultural and business property, where those assets would qualify for 100% BPR or APR. If the combined value of the property qualifying for BPR or APR at 100% is more than £1 million, the allowance will be applied proportionately across the qualifying assets. So, if you had £2 million of property qualifying for 100% BPR and £3 million qualifying for 100% APR, the £1 million allowance will be split £400,000 to £600,000 respectively. The existing rate of 100% will now be reduced to 50% where the value of qualifying assets is more than £1 million. So, if an asset worth £2 million qualifies for 100% relief, the first £1 million will still get 100% relief, with the next £1 million receiving relief at 50%. The £1 million allowance is available for each individual taxpayer, but will not be transferable between spouses like the nil rate bands are. Where an asset currently receives relief at just 50%, for example, quoted shares which give the transferor control of the company, or agricultural property where there's no right to vacant possession within 24 months, the relief will not be affected by the new rules, nor will the assets use up any of the £1 million allowance. For shares which are designated as not listed on the markets of recognised stock exchanges, such as AIM shares, the rate of relief will be reduced to 50%. Again, these types of shares will not use up any of the £1 million allowance. Lifetime transfers made on or after the 30th of October 2024, where the donor dies on or after the 6th of April 2026, will be caught by these new rules. If, for example, a lifetime gift of shares valued at £2 million qualifying for 100% BPR was made on the 31st of October 2024, and the donor dies within 7 years and after the 5th of April 2026, 100% relief would be available for the first £1 million and 50% on the next £1 million, provided that the donee still owns the shares as at the date of death and they still qualify for relief at that point. We also need to consider trusts, which may also be affected by these changes when calculating 10-year charges and exit charges. Under the new rules, trustees will have a £1 million allowance for assets qualifying for 100% BPR or APR, and this will apply on each 10-year anniversary charge and exit charge. Some settlers may have set up multiple trusts prior to 30th of October 2024, and in this case, each trust will have the benefit of the £1 million allowance. However, where a settler sets up multiple trusts on or after the 30th of October 2024, the government is introducing rules to ensure that the allowance is split between these multiple trusts. The above changes mean that some of your clients' estates will now have an inheritance tax liability post the 5th of April 2026, where they didn't previously, and it will now be important to work proactively with those clients to plan for their future. Our VIP tax team can provide you with support on all your tax consultancy projects, whether that's producing written advice, producing a second opinion, or providing a review of your work. You can find guidance on this issue on Croner-i within paragraph 664175 of our direct tax in-depth commentary.